Well, hello YouTube, Louie here, and it is Wednesday, the day before Thanksgiving. I've got the day off and I'm tending to quite a few things, and I wanted to make a little video about the silver prices, interest rates, the economy, Bitcoin, etc., etc. So I'm going to start off by saying, as you see, there's a picture of a $100 bill here. Do you have cash in your stack? Okay, and Silver Wolverine made a great video a couple days ago about cash, right? If you don't have cash, you don't have opportunity. And of course, before you start stacking silver, be sure you have your living expenses socked away. Silver is not a short-term speculation. Silver is a long-term hold for many things. Unless you're just purely flipping popular coins. So we need to have cash, right? We need to be building our cash stack right now. And I'm going to make the case for that. And I'm not saying go sell your silver. I'm saying check your assets and make sure that you are liquid. And I want to go back through the reasons why I believe that. All right, here we go. This is a picture of the Dow Jones Industrial Average as of today, day before Thanksgiving. We had a 550-point drop yesterday. What you're looking at here is a period from 2007 to 2019. Here is the bottom, was at 8,000. Yeah, it's not going to come up, but 8,000 on the Dow. Up here to 24.5 is where we are on the Dow. Okay, these two little dots here on top, that looks pretty much like a double top to me. And where are we headed? Although people are somewhat in denial that the market could ever go down, it seems to me that, about 17,000 would be a logical place to hit. I think we'd stop around 20,000, maybe bounce around, bounce back up, and go back down. So I'm not dissing long-term investing. I'm sure that has been a lucrative way to go for generations. But we have to take note of where the market is. The market is topping. The market is headed lower. Why is that? Because I think the economy is slowing. All right, so this is your first warning sign. If you have 100% of your money invested, you may want to be thinking about having a little bit out of the market, because when we're down at the trough, you want to have some liquid cash to get back into the market. I am completely out of the market into long-term fixed rate investments because of my age mostly. But even if I was a young person, I would not be 100% in the market at this juncture. So don't wait for CNBC to tell you first the first 3,000 points come off the top, and then they say we have another couple thousand points to drop, and then we get there and the panic sets in, and then we drop another 5. Squirrel away some of your stock, your investment portfolio into safer investments for the time being. Here's another corroboration of what is happening with the real estate market. Okay, you can see this is the 30-year mortgage. Everybody I know has got a 3% or 3.5% mortgage based on the dips before the Trump election. But now we're sitting up here at 5%, right? 3.5% mortgage increased to 5%. Well, that's about a 30% increase in the cost of a home. Now, I mentioned Trump. At the same time, he has removed important tax deductions for high-priced housing, super high-priced housing, like where I live in California. So it's a double whammy in California, where the rates are higher and the deductions are lower. And then, specifically in California, for 1 second, they're taking shots at Prop 13. So it will not be longer. It will not be long before more taxes on property will be increasing as well. And as you know, utilities are actually water, gas, electricity, are looking more like taxes than they are utilities these days. $1,000 electric bills and $500 water bills and such are becoming the norm in Yuppieville over here in the city. That is a hidden tax as well on property. And the top has definitely come off the market. And virtually every single person I talked to today that I talked to a year ago when I said it was going to happen is somewhat amazed that the market is topping and they can't sell their home and they're having to drop the prices. It was pretty clear we were going to get a top in the market, at least in the high-priced homes. Now, there are states that are seeing increases in purchasing and continued increases in home values, and those are the low tax, low cost states. But let's take a look at housing. Here are home prices from the trough in about 2012, right, when you could get a home for about I don't know what that is, $150,000. That's the national United States market overview from Zillow. And look where we are now. Okay, upwards of $250,000. So that's a pretty clear straight run, straight up. And, I suspect this will be the top for some time, and we will see it start to turn and come back down. So again, if you are 100% in real estate, in the stock market, and even though you have silver and gold on the side, do you have any of this? All right, if you have some of this set aside, and I'll leave it to you to figure out the correct percentage, is it 10%, 20%, 50%? Gosh, I don't know. That's a tough question. So I'll leave that to you to figure out your own preference. Because when you have money parked in cash or in CDs, there's an opportunity lost, and that is if the market continues to increase, if real estate continues to appreciate, then that is lost money. But having this right now will permit you to do this. Move back into stocks when they have stabilized and bottomed. All right, from 7,000 to 27,000, whatever that is that a quadruple? Okay, people with cash were able to buy back in near the bottom. What else can you do? Well, in real estate. Back down here, and this was not long ago, most of you remember it. Remember, there were no jobs, there was nothing happening in the economy, everyone was losing their home, they were losing their life savings. What was happening back here in real estate when we had the trough, when prices were down 50% in my state? Large corporations were buying up your properties. Okay, all the people that had purchased up here and gave their homes back to the bank, the smart money was buying in here, and buying in here, and buying in here. What are they doing now? I don't have the sightings to give you, but they are divesting, all right? The companies that loaded up on real estate down here, turned it into rental property for some period of time, they're selling it now. Okay, this is happening both in residential and commercial from what I can see. So don't be the buyer up here. Have some liquid cash ready for the next dip. Will it come all the way back down 50%? I don't know. But there definitely is a decrease coming in real estate. And when you buy, when you're ready to buy, when you have cash handy to buy, then look for income generating property. Okay? And I'm of the opinion that you probably would want to buy 3 low-priced houses before you should buy 1 high-priced house. I just think you have better opportunity for appreciation when you stay closer to the lower end of the spectrum, because people will always need a place to live, but high-priced homes tend to be well, it's almost like a collector market. People that have the wealth to purchase a high-priced home and rent a high-priced home, well, they may be in short supply when the dip comes. All right, so if you have raised cash and you have a substantial amount of cash both in your retirement portfolio and in your taxable portfolio and your disposable income, once you have put aside 3-4 months of living expenses, maybe more, then you can start to build your vault of liquid cash, and by liquid I mean CDs and so forth that you can get at. And you'll be looking for opportunities. In the meantime, those of us that have silver and gold and other precious metals are just waiting. So here is the chart going back to 2007, and we can see when the economy was busting, silver was holding its own, actually appreciating. We had a rise up, and then we had a drop back down, and then we had the spike, which I think had a lot more to do with the elections than anything else. But you saw the run up to $40–50, and here we are sitting at $14.47, bouncing around just very comfortably right at the low, which this was, we didn't spend a lot of time in the 14s in 2015, right? It came back up to nearly 20. And some of us thought we were going to punch through that 20, but we came back down. And so this gentle settling of silver, well, it does seem to predict that there may be a spike down at some point. And with the crashes happening, it's been good to see silver holding its own while other asset classes are truly crashing. But could we have a spike down? Yeah, we could. Could we have an ultimately build back up? Back to the $40–50 level? Well, of course we could. And gold, same thing. So this is insurance in my mind. But if you're speculating in silver and you think that this could come back up, an increase from 14 to 20 is a substantial profit. So I don't think there's anything wrong with holding bullion in here. And of course, numismatics, and usually hold their own pretty darn well in bad times. So there is your silver. I view that as a, well, it is two things. It's an insurance policy against the world falling apart, and I probably would never have more than 10% of my total net worth in precious metals. And it is a speculation if we do get a rise up to 20. Some of us will be selling some of our stacks, not all of it, because we have fluctuated in this 15 to 20 channel for some time, and we might continue to do that for some time, but at some point we will get a spike back up. It's inevitable with what's happening in the credit markets and what's happening around the world. In my opinion, this is not professional advice, but I have no problem having a large holding of silver and gold down here in the 14s. But when I say large, I mean 10% maximum of my money. All right, 10% maximum. So let's take a look at cryptocurrency. All right, here we are in the Bitcoin chart. If this makes you vomit, then you probably have too much crypto in your possession. But we're sitting down here at 4,575. Okay, anybody who knows me over the last year knows I've been predicting 4,000 Bitcoin. That is, I don't invest in cryptos other than a little bit of Ethereum I bought on a wild little ride related to the Norfed dollar. But Bitcoin, right? I mean, when it was at 20,000, everybody was saying it's going to 1 million, it's going to 100,000, and some people bought up here, and some people held all the way to here. So a lot of people thought 6,000 was the bottom. Well, no way. All right, with a chart like this, okay, exponential rise, things always revert down back to the base, and we are not at the base. Now, can I move this over a little bit? This thing here is bugging me. But here we are at 4,574. I think 4,000 right around in here is a logical place to bounce. But could it go back to 2? Yeah, it absolutely could. But there could be another run up as well. But a lot of money coming out of crypto. Matter of fact, what would appear to be most of the money coming out of crypto, right? So that's probably good for the silver and gold market. for those people that weren't watching. Okay, sorry, I got cut off there because I'm getting long-winded. So let me wrap this up. Yeah, so Bitcoin, yeah, I think around 4,000 you could speculate on a rise back up, but it could certainly go lower. And I wouldn't put anything more than play money into cryptocurrency. Although I am coming around to the concept of it being an asset class in and of itself. But most people were completely ripped off in so many different ways, it's ridiculous. So I think it's beginning to become clear that more people lost money than made money in crypto. But I guess you could say the same thing about precious metals, so let's not be too critical. Let me get back to my conclusion. Have some liquid cash. When the bottom falls out, and you won't see it coming, nobody will believe it, you know, everybody is indoctrinated by virtue of their stockbrokers and their real estate agents and their mother-in-laws and their, you know, their best friends and their fear of missing out. And the conventional wisdom says don't time markets, right? But after being on this planet for over 60 years, I will tell you that timing is everything. And you should be brave when people are fearful, and you should be fearful when people are brave, right? Don't buy into the I'm buying it high and I'm going to sell it higher. And if you're doing that, just do it with speculation money. You know, if you're doing that in any market class. But if you're buying for the long term, for your family, you're setting up your homestead, sometimes it pays to wait. Sometimes it pays to raise cash and be that guy that can come in and scoop up the bargains. I think the bargains are coming. I think perhaps even something much more catastrophic is coming. But while we hate fiat, man, it's a good time to have a pile of fiat. It's a good time to be raising, and you haven't lost anything yet, right? The market's down, what, 10%, less than 10%. Real estate's down, you know, 5%, 10%, maybe nothing in your state. But if you're heavy into any one class, you may want to raise some assets. Just the timing is everything. I remember when I was at the top of the real estate market with my overpriced house, you know, I had everything in it. And when we fell 50%, it was nearly the end of my world, right? Having been a, you know, having had a pretty fortunate life. And we held on, and luckily we were able to get back out at the top and not lose anything. But being liquid gives you opportunities. Gives you opportunities for precious metals. It gives you opportunities for real estate, you know, that you need to live. It gives you opportunities to get back into the stock market when everybody else is telling you it'll never recover, it'll never go up in a generation. Okay, when you hear the fear back in the market, that's the time to start buying again. But you can't buy unless you have some liquidity. So think about raising some cash. Think about having it aside, maybe even having some that isn't in the bank. But generally, I think parking some in CDs and, you know, whatever readily accessible places is just fine. I don't think we're actually headed to, you know, Mad Max dystopian future. But I do think the dollar bill will be devalued at some point. And until we get there, the bottom can drop out of the price of everything. And be prepared to buy what you need and hoard what you want when we get to a lower point. All right, well, I think I've started to ramble, but old Ben Franklin here, actually, I think we will, the U.S. will eliminate $100 bills in pretty short order. They'll probably be confiscating them, and because they'll blame it on the drug trade or something. So you may want to hoard 20s, not hundreds, especially if we have a money reset. But anyway, do have some dollars. I'm not saying have all your money in dollars, but do have some dollars available to pick up the bargains when they come. Tops are coming. Tops are in, I think, and bottoms are coming. And you know, I think mom and pop on the street are getting a little nervous. So look for more for sale signs in your neighborhood. Look for more sell orders in the brokerage accounts. Maybe silver, gold, cryptos will take another bump down. But this guy here, he's going to be your friend when it comes to building back up your real tangible net wealth. Okay, and we'll see you guys later. Take care.